Hello, ladies and gentlemen, Greg Mikulowski from ForexLive.com. Today's date is August 26, 2024. I'm going to take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective. So let's get started. I'm going to start by taking a look at the daily chart of the euro versus US dollar and trading both on Friday and again today. The price moved up and through what was a key level, a level that I had earmarked here at the 1.1184 level. It's important to me. Well, this low right here came in at that level. Then we traded above it and then moved a little bit below it here, only to move back above it and then move below it and above it through here. But the last thing the market did before it rotated all the way down to here was retest that level right here at the 1.1184 level. And lo and behold, well, on Friday, the price moved above that level. In early trading today, the price also moved above that level. That was during the Asian session last night, if you recall. But we couldn't get above the 112 level. The high price both Friday and today was right around the 112 level, within less than a pip of that level to be exact. And we started to rotate to the downside. Now, the range was somewhat modest in trading yesterday, and the low price that we saw in trading yesterday and coming into today is able to hold above this area between 1.1095 and 1.1346. If you recall from my video yesterday, I said we need to get below that level to increase the bearish bias. So that's still alive with the 111.84 up to 112 level as a key area to get to and through on the top side to increase the bullish bias. So this is a support down here and up here near the this 84 level is now resistance, and if we get above that level, we head toward the 61.8% retracement, 1.1270. If we get above that level, it opens the door for further upside momentum. Taking a look at the hourly chart here, what is key on the downside here is that the price is approaching, or let me just say the 100-hour moving average is approaching the price. Let's just say that. We are seeing the price did move lower, trading here today, getting below that 84, 85 level right through here, and pretty much stay below that level for the rest of the trading day. We are currently trading 111.60, below that 84, 85 level up here, and below the high prices near the 112 level. On the downside, that 100-hour moving average, admittedly, we went below it on Friday's trade right here, but could not sustain the momentum and then reestablish the support and rotate into the upside. And if we go below the 100-hour moving average and stay below that 100-hour moving average at 1.1143, that should open the door for further downside momentum in the euro versus US dollar. So keep that level in mind going forward for this currency pair. Let's take a look at the dollar versus yen next. And on the hourly chart and trading at this time yesterday, we did move lower. That was at the open. We saw yields move lower in the U.S. and other follow-through selling in the U.S. dollar as a result of Friday's FOMC rate statement. But we did have this as a target down here at 143.39, and you can see that the price moved down toward that level only to find support buyers against the level. So that level right here held support right here, and the price started to build back to the upside. We had this swing area between 144.03, 144.47, and we were able to inch above that level in trading or trading yesterday at the close or near going into the close. And that area right here is defined by a number of different swing lows going through here. So it was a fairly decent floor going into trading today. So breaking below this floor area right here and then moving back above it is a little bit more bullish. On the top side, we do have the 100-hour moving average and the 200-hour moving average. Note that last week's trading, we started off with the 200 below the 100-hour moving average, and we moved above it just right here. This is on Monday of last week, but fell short of the 100-hour moving average. Then further into the week on Thursday, the price was able to get above the 100-hour moving average, but could not get to the 200. And so we waffled above and below through here. And then on Friday, the price also moved above it through here, but could not get above the old high from Thursday's price, nor get above the 100 or the 200-hour moving average, the green line in the chart. So sellers return. So ultimately, if the price is going to go higher for the dollar versus yen, we need to get above both the 100 and 200-hour moving averages. They'll come in at 145.20, 146.29. Both of them are moving to the downside. So it is getting to be an easier hurdle for this pair. So be aware of those levels on further upside momentum. On the downside, if we break back below the 144.03, down below the 144 level, that would keep the sellers more firmly in control, give any sort of dip buyers a cause for pause, and help hurt their feelings toward the upside momentum or potential in the dollar versus yen. So I'll watch the 144 level on the downside in the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. Take a look at the daily chart to start things off. And if we go back in time off of this daily chart and go all the way back to this high price, going back to the 2021 high price to the 2022 low price right through here, the 61.8% retracement was broken a couple weeks ago after holding both the 100 and 200 day moving average. That's the blue and green lines in this chart right through here. That gave the buyers the go ahead to push the upside, getting above this cluster of technical levels. And the price has indeed pushed higher in trading last week. The price moved above the high price from the month of July, and that increased the bullish bias. And in trading yesterday, the price moved above the high price going back to 2023. That came in at 1.3142. And as you can see, we've been able to stay above that level. That level is going to be close to support now for traders. If we're able to stay above that level, the upside is more, upside buyers remain more in control. The next target would come way back here to this high level going back to, what is that, the month of March or so of 2022. Came in at 132.97. And certainly something doable here for the sterling versus US dollar as long as the price remains above 131.42. Like the euro versus US dollar, we'll take a look at a shorter term chart. I'm going to put it on the hourly chart, see where we stand with regard to this. And you can see how the market has been trending to the upside. Lots of up days through here that is just taking the price higher and higher and higher. It all started once again when the price found support. Buyers down here against the 200-day moving average, 100-day moving average. So all that was a more bullish bias. And going forward, if we're going to move lower, we're going to need to get below the 100-hour moving average, which is rising fairly quickly at 131.17, but still, a good 60 or 70 pips away from the current price at 131.87. So be aware of that level on the downside as a 100-hour moving average moves higher. Alternatively, maybe watch these levels right through here as close support between 131.28 and 131.35-ish type level. Had different highs going through here from last Thursday and Friday's trade. So that with that 100-hour moving average moving in toward that level, it's going to represent a key support going forward. So there you have it. A look at three of the major currency pairs to start off your new trading day on this day in August 26, 2024. My name is Greg McGlosky. Good fortune with your trading. Bye-bye now.